and co-founder of the She Angels Foundation. I'm also the podcast host of Invest in Her and an award-winning producer, author, and TEDx speaker. Our show, Invest in Her, features phenomenal female founders and funders. As you know, women receive less than 2% of venture capital funding. Our series is about accelerating the funding of women by connecting them to funding resources. Let's meet today's guest. Today's guest was recently recognized by Forbes magazine as she's a millennial who has raised almost $1 billion in the investment world for others, and then decided to start her own company, Alternative Wealth Partners, and she's starting her own fund. Please welcome to the show, Kelly Ann Winget. Hi, Kelly. How are you?
Hi, Catherine. I'm so excited to be here.
I'm excited to have you here. Wow. What an amazing record you have, especially at your age. I'm so impressed. I've just gotten to know you. We, of course, were both at the Wealthy Women's Summit, and I'm just amazed by how incredibly smart and charismatic you are at your age. And I just love what you're doing with Alternative Wealth Partners. I mean,
thank you.
It's amazing. And I want to mention that you flew in from Dallas, Texas today to be with us here in LA.
Yes, it's still hot in Texas, so it's nice to come over here and enjoy some cooler weather.
Yep, we do pay for our weather.
Yeah.
So how did you get involved in this? Because, we both know not a lot of women are in the investment world. And, how did you first step into this arena?
So I'm extremely fortunate for having two parents that are in the financial services space. So I just grew up around the conversation of money. It was never, an off-table topic. It was talked about at dinner every single day. I'm also a fifth generation oil and gas family. So I have oil and gas on both sides, both my father's side of the family in West Texas, Midland, Odessa, and my mother's side of the family in Louisiana. Petroleum engineers, landmen, roughnecks, you name it. So I was
it's in your DNA.
It's in my DNA.
Yeah.
So I eventually found my own way into the oil and gas industry. In 2013 is really when I started to really get into in the investment space from the oil and gas perspective.
So almost 10 years ago.
Yeah. So 10 years ago.
You were what, 5?
Yes, exactly. So at 5 years old, I started raising my first dollars. And it was a really interesting time to really get involved because at that time, oil and gas was creeping up to $130 a barrel. So, which was what we experienced this summer. And there were a lot of things that were going on in the industry that didn't quite make sense for me. And so my job was really to help this particular oil and gas company buy assets in the Eagle Ford and then connect those assets with investors looking for cash flow. Now, at $130 a barrel, that's pretty nice cash flow for investors if they're buying at the right price. But at that time, everybody was getting into oil and gas. So they were overpaying for these assets. And I kept kind of beating my drum over, you're paying too much, you're paying too much, you're paying too much. And I said, best of luck with you guys. I'm going to go do something else. I moved to California, actually. And about 6 months later, oil crashed to $30 a barrel.
You had that intuition.
Yeah.
Yeah.
Yeah. Because, if you look at historical information, history is very important when it comes to investing.
Yeah. That goes for real estate,
everything,
stocks, everything,
all of it.
Right?
You got to
pay attention to it.
It repeats itself. So I just kind of saw the red flags and said, I'm going to go do something else. And came and enjoyed the weather in Orange County for 4 years.
Love it. And then you went back to Texas.
Yes.
When did you start Alternative Wealth Partners and why?
I started AWP at the best time to start a new business in the middle of the pandemic. So this was literally the summer of 2020. And at this time, I was working with a large private equity company. They had over $3 billion worth of assets under management. And I was the smartest person in the room, which gave me the maybe I should be doing this for myself now.
Right.
And so
I love that you had that confidence, because so many women second guess themselves. They're like, could I really be the smartest woman in the room or person in the room? And the answer is yes. Yes, you could be.
You usually are.
Yeah, right. And so I love that, because every week that's what we do. We talk about women becoming angel investors, how do women get funding. I love that you focus on helping startups or businesses get their funding. I was reading that you typically like to invest in companies that maybe have like $1 million but in revenues, but could be doing 10 or 20 million in revenues, and that's kind of your sweet spot that you look for. Is that right?
Yes, it is.
In fact, I was just going to say, you and I, when we met, I turned you on to a retail company, and that's exactly the scenario. And I'm so happy that you invested in them. I know it's private, so we won't talk about it, but a retail company that, thanks to you, got enough funding that now they can get $1 million equity line so they can produce more product and grow that company to hopefully be a 10 or $20 million company.
Right. And
very exciting.
Yeah, it is really exciting. And the difference between like how we make our investments and how like traditional PE invests. So private equity typically wants some sort of controlling interest. They come in and they change the whole system to be better, and then they flip the business to someone either larger, or they sell it to be acquired to maybe a competitor. So we're in between this angel investor, startup capital, and what a bank or a large private equity company could do.
Right.
We have no interest in like taking someone's business away from them. We want to give them the right capital in the right way that gets them to the next level, so that they can succeed and go on and do whatever. And so we get to make our profit. The company gets to grow. And then we move on to the next project.
Right. And so the investors in turn make the profit.
Right.
Right. And you, I've read your, acumen that, you have a pretty high rate of return that you expect. And your getting paid really depends on that.
Right.
So that's a great strategy that I think most companies, investment companies don't follow that. It's like they make sure they make money, but they don't always make sure you make money.
Right.
So yeah, it's a great strategy.
It was just the last 10 years of watching the cost of capital. So the amount of money someone's paying for money in the private space crossing over 17, 18, 22%, which is really aggressive, because that means you have to, and then in turn, make 30, 40, 50% returns.
Right.
Just to give an investor a 6%.
Right.
return.
Which really hurts these founders, because it makes it nearly impossible for them to be successful in that type of scenario. And a lot of these investment firms, they don't care. They just want to make their money.
Right.
So I love that you have conscious investing strategies.
Yeah. I think that
it's refreshing.
We're going to see more of this, I think, over the next decade, where greed is starting to be removed from the equation, because you have these people that are worth.
You know why? Because you have more women coming into the arena.
Right.
Honestly, that's it. Women do business differently. They for the most part, and I'm not saying all men don't, but the venture capital world has very much been white male driven, and it's been that type of acumen. So it is taking women to step into that arena, start creating their own funds like you're doing, to change up that mentality.
Right.
Yeah.
When I decided to launch the first fund, I knew that I had been working in the shadows for a decade. So me coming to the table with no, recordable track record, either through non-competes, non-disclosures, type of capital raising, I basically had to come out into the world as like, I'm this person who's existed and I've done all of these things, but I can't tell you what I've actually done. You just have to believe me. And we've been able to raise over $15 million in 8 months.
That's fantastic. And your goal is 50 million, right?
On this first one.
Yeah,
and,
very aggressive.
But we're not letting that stop us. I don't think we'll raise the full 50 in this fund, because one of the main components of this is that I don't charge fees in this fund. So it's all performance based, and we have a really high hurdle. So investors really get 100% of 90% of the profits, you know?
Wow.
And I did that because I'm a normal human being with like a normal life, you know? I have a partner. We have 2 kids, 2 dogs, and a cat. And we live in a normal house, and my lifestyle isn't millions of dollars a year.
Right. It's not extravagant.
Right.
Yeah.
I feel like I should get fairly paid for the work that I do and not anything aggressive. So if we hit the bare minimum of our targets in this fund, I'll walk away with $10 to $15 million in 5 years. That's pretty good payday.
Yeah, that's a good payday.
If I structured it in a normal 2 and 20, I would be paying myself $2 million a year and then get a cut. And so the investors, and then expensing everything through the fund, right? And so the investors are paying for everything that I'm doing. They're not doing that in this fund. I pay for it.
Right.
And let's say we raise the full 50. We do our minimum, which is 3xing. So now we have $150 million value of our fund. The way that I have it structured, about $135 million go back to the investors. And if I did it in a traditional fact, they would get about 100. So
right. So it plays in the investor's favor.
Right.
And you know, I said this on the show before, and I'll say it again, is that we are in a time that history is being made because more women than ever are creating and starting their own funds. This is an amazing thing. It's what's going to turn the tide. We need more women, angels, investing in these funds, and that's going to be a game changer. That's what I'm doing a film about, as you and I have talked about, because I want to raise awareness to this fact. And having women like yourself on the show that are actually starting these funds, I think really is a great platform to educate women to, hey, investigate this company, Alternative Wealth Partners, investigate Kelly's funds, investigate what other women are starting funds out there, and determine where you could be investing.
Right.
Or who you could get investment from. Speaking of that, your fund is investing in what types of businesses?
We are invested in everything from oil and gas to ammunition manufacturers to cannabis and coffee. Like, we are very diversified. And I created the fund this way because I've worked on over 200 individual private placements, and there was not an option to have like this mutual fund of alternatives like in the private space.
Right.
And so I just created it.
Right.
And so I created the diversified fund because it's really hard for an investor who has a whole other life, right? This person's a small business owner. Maybe they're an executive. Maybe they're a doctor or a lawyer.
Yeah.
Like they have a full-time job. So they can't go and then become an expert in coffee and cannabis and oil and renewables and blah, 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 right?
Right.
And then deploy $50,000 at a time because that's typically the minimum when we're talking about private placements.
Right.
So
And
I give them the choice to take that same investment capital and spread it across 25 different assets.
Right. And that is the beauty of a fund, right?
Right.
You're pooling your money with other investors so that it has more gravitas, and then you put it into several different investments that you have vetted so they don't have to.
Right.
Instead of putting it in the market, which obviously is very vulnerable and very erratic. And I know you're not a big fan of the stock market. I mean, of course, everyone should diversify, but what do you think is the leg up on this type of investing versus the stock market?
Well, it used to be that you would have this like 60-40 portfolio, like 60% stocks and 40% bonds, and then you know sprinkle in some life insurance and annuities, and this is what worked for the last like 40 years, or worked, right? And you could see a shift. It's actually on the Yale Endowment website. Like you can go to Yale and look at their endowment allocation, and you can see the 180 shift that they've done since 1980 to today, away from stocks and almost 90% in alternatives.
Really?
Yeah. So
wow.
you
I'm going to go to that site and look at that.
It's really interesting. If you look at the biggest money in the world and where they're invested, it's almost exclusively in private equity and venture capital. And that's happened in the last 25 years.
And that's the reason, like, I'm talking about this every week and trying to, through the film, pull the curtain back and say women need to educate themselves on being in this space. Women in the next decade or two are coming into trillions of dollars. Where are they going to place that? They need to educate themselves about angel investing, venture capital, and this alternative investing through private equity. Right? I mean, because like you're saying, the old way, they can't put all their money into that. That's not going to be a good, safe avenue. And this world of private equity, angel investing, and all this is so exciting. Because you're getting in on the innovations that the average person don't even know is coming. In many cases, and then you do. Types of investments that are not typical. Now, you mentioned ammunition. When you first told me that, I remember our conversation, I was like, ooh, ammunition. I was like, that doesn't sound good. But then you said, yeah, but what do you think is being made to go over to Ukraine to help them fight that war? And I was like, okay, I see that perspective. Now it makes sense. And you invest in companies that have been around and doing that 100 years, right?
Well,
but there's very far and in between. They're far and in between. They are, what a unique investment.
So there's not a lot of, you have these really old industries, oil and gas, ammunition, these types of industries have been around a really long time. And so you have these big companies, Winchester, Federal, in the ammunition space, and their manufacturing process and equipment, you're talking about a 150-year-old, century-old manufacturing process. It's almost 2023. Okay, you can't be having these massive assembly lines doing this stuff. So we're partnered with a company that's basically just turned that entire process into an automated robotic system where all you have to do is change out a part or two and you have a whole new assembly line. And so they're able to do massive amounts of more capacity than their competitors just because they've innovated the process. And if Winchester or Federal wanted to come in and still compete, they would have to spend billions of dollars either building out new assembly lines or completely renovating their system.
So you invest in companies like this that are changing up the game of things that we've been doing the old way, kind of the new way, in these type of industries that we typically are not thinking about. Yeah.
And it's I help investors kind of disconnect a little bit. Because, we're human beings and we're emotional, right? And emotion and investing can get really sticky. Especially when you're talking about the stock market, right? A lot of people that I'm talking to now are in panic mode because even though I told them last November, hey, you should maybe consider doing something else. And they just every quarter have been like, I should take my money out. I should take my money out. And I'm like, you probably should. And they still don't do it. And they just watch it go down and down and down. And then I'm sure at the end of the year, they're going to super panic and then just pull all their cash out, take all the losses, and which is okay. You can get creative with that. But we take out the emotional part because I'm not a gun person. Okay. I live in Texas. Okay. But I don't see a need for it. I have two 75-pound dogs. Okay. Nobody's coming into my house. But I do understand the global need of it. And it's just something you have to accept. And you have to remove the emotion part if we're going to be focusing on returns.
And then you invest in oil and gas. I'm sure that's going to blow up my phone too, because obviously people are wanting to go green, and and what are your thoughts on that?
So I'm biased. I've obviously my entire livelihood is built around oil and gas, but the reality is that we are power hungry, crazy people in the world, right? We cannot stop using energy. And for the time being, fossil fuel fills that need. We've been able to replace a significant portion of that, but the reality is we don't have the infrastructure to completely transition yet.
Right.
And when we have high oil prices like this, the oil industry doesn't like when oil is crazy like this.
Mm-hmm.
The oil industry wants like $65 oil. Like just that is good.
Right.
And what that translates to you as a consumer is like in Texas, like $2 gas. Maybe here in California it's $4.
Yeah.
But it's like normal prices. Everything is kind of manageable.
Right.
When it's volatile like this, the oil companies can't plan.
Right.
And we're talking about a commodity that comes out of the ground. You cannot put it back there.
Right.
So they have to be very particular about how they plan.
They're
not going to pull it out if they think that the price is going to go up and down, up and down, up and down.
Right.
They're just leave it there. It's more valuable in the ground.
And so it seems like most of these oil and gas companies are looking at alternative energies and investing in them for that shift that they see is coming. Is that right?
Oh, yeah. I mean, the thing is that you might hate Exxon, but Exxon's going to be your power provider until the end of time.
Right. So they're shifting. And
there'll be an oil and gas company today, and in 20 million years, there'll be a solar company. Right.
Right. Who knows when? But I know they are shifting to that. So that's some good news.
Yeah.
And you're investing also in the cannabis industry. Yeah. I mean, that's just burgeoning, right?
Yes. It was an interesting thing because I've been watching it for a couple of years. When I moved to California in 2014, and about 2015, it was really popular. A lot of investors wanted to get involved in cannabis. Mm-hmm. So they were like looking for all these different types of deals. And at that time, I was like not interested in cannabis stuff. Mm-hmm. I thought it was like really competitive and no one quite had it figured out yet. And now that it's become really popular, we have a majority of the states have approved at the minimum of a medical marijuana law. And so we're not really focused in the United States. It's more of a global thing for us. So we're invested down in Jamaica, actually. So, and it's a wholesale growing process. So we wholesale it to pharmaceutical companies all over the world. So we're not really tied to what the United States is doing federally with cannabis. But we also deal with retirement funds. And so we take people's 401ks or IRAs into our fund. And so we can't directly invest into cannabis. So I've structured all of our cannabis deals as real estate debt. So we hold interest in the properties, not necessarily the cannabis companies. And so that's how we are able to let people take advantage of cannabis without
very smart
actually being invested in cannabis.
Right. Indirectly.
Right.
And, manufacturing is the number one way that people in the country make money, just behind real estate. It sounds like that's why you're really focused on this niche of manufacturing and
infrastructure.
And then real estate. Yeah. What would be your advice to someone who's thinking about stepping into this arena, maybe investing in a fund? What is it that they need to know, or what advice would you give them? So I want your audience to kind of understand that it's not your fault for not knowing any of this. It's on purpose. And I've worked behind the scenes watching that from behind the curtain. And you're actively being avoided when it comes to these opportunities. So being purposeful in your mission to start investing is important. So decide you're going to write the check and then do it. It's the only way to start getting into the rooms and being invited into deals, because you'll stop being invited to deals if you're never funding them. Right. And this is for accredited investors, right? So that people have to look into what that means exactly. Right. There's a certain criteria. Now, if they're not an accredited investor, but they are a woman that is starting a business, you do try to help these businesses get funding. Right. And the sweet spot is they're already in business. Maybe they're doing $1 million, but they know they could be doing $5, $10, $20 million. Does it matter what sector they're in?
No. So we separate our funds out and this first one is a diversified fund. So it's really diversified. So it can invest in anything.
So it could be tech, could be retail.
We have
could
fintech.
be products.
Yep. Yeah, we've got it all. So we have fintech. We invested in the Series B round of Elevest, which is a female-founded. Sally Krawcheck founded this company.
Yes.
And if you're starting your investment journey, it's a great place to start. It gives you anything from basic financial literacy all the way up to private wealth. So if you are in that accredited, and so to define that for your viewers, it's just if you have $1 million net worth outside of your home or a $200,000 annual income. If you're married, you can combine your incomes for $300,000. That qualifies you. And then the SEC actually just decided in summer of 2020 that if you have your Series 65, you also qualify as an accredited investor, and they've removed the sponsorship requirement. So if you really are, if you're an academic person, you could go study for the test and take your Series 65. You don't need a broker or anything to sponsor you. Then you have the sophistication that the SEC is looking for to be an accredited investor.
Right. That's a great explanation.
Yeah.
Thank you. And if you're someone that owns a company and you need funding, they could come to you.
Yeah, I love having these conversations. It really is kind of a unique spot trying to figure out, do I need my bank relationship to step in, or do I need investors? And I have my own qualms with banks giving businesses funding right now. They don't want to fund anything, even the small local banks. I had a phone call literally yesterday with my bank about doing a deal, and I'm like listing off all of these things that they could take debt on. And I'm talking about pretty impressive rates for a bank to earn, which is usually like 2 or 3%. And I'm like handing them an 8% return. And they're like, we don't know if we can invest in that because, you know, we really want to see account receivables. I was like, they have millions of dollars in deposits.
Yeah.
What?
Yeah.
Like, they're deposits for these other things. Like, yeah, but we really want to see the other money in first. I'm like,
yeah.
Okay.
Yeah, I think, you know, so sometimes when you're dealing with institutions like that, there's so much red tape.
Yes.
And they're not really visionaries like yourself. And so I think that's your leg up, is that you're a visionary.
Yeah.
And I know when I brought this retailer to you, I really believed in that founder, and I thought they just need somebody to help them restructure their debt and give them this enough investment that they could get this equity line so that they could, you know,
go. Yeah.
They have the orders, they can't fill them. Hello, what a great investment. You know,
exactly.
Everybody should have that problem. Too many customers, right?
Yes.
But no, I appreciate that you had seen that vision that a bank could not. All they could see is, oh, they have debt and, you know, what? Yeah, I know. It's like, it's good to have smart women in the room, like I said before. So
investors need to understand, especially women, you are going to be the reason why banks become irrelevant. There's not a worse place to put your money than a bank. It sits there. It does nothing. They do nothing with it. If they do something with it, it's usually a terrible real estate deal. So you can be a better investor than your bank, and you should just put your money to work.
Yes.
While you're working.
Well, here's the thing. Women are risk adverse, right? I don't know why. It's in our DNA. It's in the culture. Women are taught to be that way, but more women need to follow in your footsteps and reach out and educate themselves on angel investing, venture capital opportunities, private wealth opportunities. What would you say is the difference between the private equity and investing in venture capital? Can you explain that?
So private equity is going to be typically later stage businesses. Like I said before, most private equity companies are coming in with a controlling interest. We get more specific about our deal structure, and I think that venture capital is kind of like a shotgun strategy, where how many companies can we invest in for as little as possible for the biggest gain? And that company could either be pre-revenue or maybe just starting to generate revenue. Also, we take all of our capital up front. There's not, let's go find portfolio companies. we have a strategy and that's how we invest. They kind of coexist like this. I feel the reason why I went with private equity and not venture capital is I feel like I have more flexibility in private equity than I would have in venture capital.
And how would someone decide if they should seek out private equity or venture capital?
It's really about your financial goals. So the best piece of advice I can give you is find a really good CPA or a tax planner and find a really good estate attorney. So once you can get really comfortable with your own financial situation, you can really hone in on what your strategy is as an investor. Because how long do you have left to work? How long do you want to work? What is the amount of money to let you live the lifestyle you want to live? Like there's all these things you have to think about before you make an investment.
Right.
And it's just, we are risk adverse, but if you've made the decision that you're going to take the risk, the horizons are just very different on either side of those things.
And many women too might be in a position that, like I said, they're inheriting trillions of dollars. It may not even have to do with lifestyle. It may be like, hey, I can just park it in these bonds or these stocks, or I can do something with it that's going to make a difference. And so that's what I like about the angel investing, private equity opportunities that people have, is to invest in other women and help their businesses to flourish while making money at the same time.
Yeah.
And so, giving us a purpose, profits with purpose, as my friends at 360 Collective say. So thank you so much for being here.
Yeah.
And you're just a wealth of information, no pun intended.
Thank you.
And how can people reach you, Kelly?
So I'm pretty accessible online. So if you go to our website, which is alternativewealthpartners.com, we have a contact sheet there. I think my Calendly is somehow connected to that. But I don't run most of my social media, but my LinkedIn I do. And I'm on it all day, every day. So if you message me on there, I'm the person who's responding to you.
Love that. Okay, great.
And I post a lot. So if you're wanting to kind of passively start learning about this stuff, then I encourage you to follow me on LinkedIn. And if you have questions, then you can always message me on there. I'm happy to have a conversation, whether you have $1 million or not.
Love it. Love it. Thanks, Kelly. Thanks for being here.
Thank you.
And everybody, thanks for tuning in this week. You can find Kelly, obviously, on LinkedIn. You can find me, Catherine Gray, on there as well. You can follow Catherine Gray Invest in Her, of course, on Instagram. And She Angel Investors, we are everywhere. Facebook, Twitter, Instagram, you name it. You will find Kelly and I one way or the other. Thanks for tuning in. Make it a great week. Remember to invest in her.